Welcome to the SaaS Revolution show. Donatella Callegaris, Managing Partner at Flashpoint Ventures. Welcome, Donatella.
Thank you. Thank you very much, Alex. It's absolutely a pleasure to be here. I wish it would be in person, but you know, what can we do? We need to just try to make it happen in 2021, shall we?
Definitely. I would love that. Yeah, we're sort of missing catching up. Whether I bumped into you at Slush last year. You're obviously at SaaStock in Dublin every year as well. Yeah, unfortunately, we couldn't do it this year. So over Zoom for now, but next year certainly we'll look to catch up in person. So Donatella, obviously, you've been coming to SaaStock conferences for a number of years, and I've gotten to know you, and but our audience might not know you as well as I do. So I would love you to tell them a little bit about yourself. Who is Donatella Callegaris as a person, and what are you doing, and at Flashpoint, etc.
Okay, so I'm very much, Donatella is a massive giveaway. So I'm pretty much Italian. So I was born in Trieste and grew up there. But I'm also a Londoner by heart. I've been living in London for a long time. I'm a mom of two boys, 1 and 10, and the little one, my little monster, is 2, and they are adorable. And it's been a challenging year for everybody. So I really hope, and I wish to all the founders and all my colleagues in equity, and as well as my fellow competitors as well, to just be safe, and let's hope that we're gonna go back into the normality. So in terms of from a professional level, I've been providing venture debt to VC-backed technology companies for over 10 years. I started my career at Creos Capital, and then I was one of the founding members of Columbia Lake Partners. I joined Flashpoint last year, and in Q4 last year has been an amazing journey so far. What I love about Flashpoint is a financial organization that supports technology companies from Series A to venture debt and to secondary. So the idea is to be able to support companies without them going too quickly into the US, let's say. So I'm the managing partner of the new venture debt fund. We had a tremendous journey, and considering we launched the venture debt fund just before this crazy 2020, I'm even prouder of what we have achieved. So the target of the fund is 50 million. euros, and we are targeting targeting a check size of 1 to 5 million euros per company. Again, investing in VC-backed technology companies. I built my team. We are a team of 4. Is myself, is an investment director, Artyom. Then I have Ilya, our investment associate based in Riga, and then our analyst based in Warsaw. It has been quite a challenge to have a team that is not based in the same place, because I'm based in London, and together with the investment director, but at the same time brought us closer. We literally, like most of you guys, we haven't taken one day off since March. We have been plugged through trying to find the way to help company and invest in the right opportunities. So I was really pleased to say that we closed the fund. We did the second close, the first and extension of the first close of the fund. So basically we are more than halfway. We're planning to close at the end of Q4, and we've done about 4 investments, and this is where we are. So maybe you would like to know more about the product.
Yeah, well, definitely. I mean, and great. Thanks for that background and overview. I saw that you this year, like on Facebook, I think that you've been doing quite a few flights to Moscow. Like, is there a Russian connection to Flashpoint?
Yes, the founders of Flashpoint, they even though they're not Russian themselves, they started as investment bankers in Moscow, and they and hence the connection. And they started Flashpoint about 7 years ago. So we have it with a VC. They are fundraising for Fund 3, so they targeting Series A. Our target is pretty much the extended Central Eastern Europe, Finland, Baltics, and Israel. And I would say, as long as there is a meaningful connection in my geo, such as founders coming from the geos of R&D, or tech team or even investors, because I notice a lot of investors coming from our geo moving more and more into Western Europe. I can pretty much invest anywhere really, as long as I have a connection. And yes, my flight to Moscow is because I had not all of my LPs are coming from Russia. I have a number of LP coming from Russia, as well as other parts of Europe and the UK. So we consider ourselves pretty much international.
Amazing. Yeah, definitely sounds it. And so, like Donatella, our audience is mainly SaaS founders, some VCs and so on. But on the SaaS founder side, kind of probably in the first journey to building a SaaS company, looking to scale it. For them, that perhaps they haven't heard about venture debt before. What is it, and what are the main uses of it?
Okay, so as you know, Alex, I've been educating the market for a long time. So and now actually it's exciting again, because I think I've done a very good job in Western Europe, and in my last adventure, particularly in Germany and the Nordics, and I believe they're all the new guys around, the super cool guys around the block in terms of new VCs that now are raising their second or even third fund. They're fully aware of the product, and now I'm doing again. I'm educating the founders and some equity investors as well in our geo. The venture debt is essentially a term loan. You typically, there are different situations where it's beneficial, but in probably is more useful to explain how the component of it. So you have, as I said, a term loan. They typically last for 36 months. It can be tranched. It depends on the situation and opportunity and the use cases of the target portfolio company. And then it's called venture, because there is we do understand how to finance companies that are burning cash, but they're burning cash to grow. So we look at credit at a completely different way how banks would look at credit. If we take away a couple of exceptions where there are few banks that really do a great job at it, it's not a typical bank product. And also there is an equity component attached to it, and the reason why the founders like it, and also the equity investor as well, is that use at the right time. And I'm always stressing this very carefully when I explain the product. It's not a product that should be used at all time, but there are certain situations where I literally call it a textbook scenario. So what is the upside to the founders? I mean, the biggest upside to the founders is diminished dilution. So if you're looking at the fully diluted ownership of the company that any venture debt provider would take, when we exercise our option, we exercise our warrants. So we're talking about 1% to 2% fully diluted ownership. So that it would be absolutely clear immediately to founders the benefit of not doing another round of equity, or taking, they could take less equity and use add some venture debt to the round, or they can and also the other upside is that we don't price. So we typically, because we take the equity portion that we take is a right to buy, essentially, is an option. So we don't need to do a price round. And that is really helpful to high growth technology companies and management team and founder as such, because they know, especially in the SaaS SaaS ecosystem, is that you have a much more visibility of the revenue. So and you're able to actually figure out that if you sometimes you are in a situation in which you might be able to, if you are able to burn more cash in sales and marketing, for example, you will be able to raise a little bit later at a higher valuation with possibly with more with the investor that you want, or maybe the tier one investor that you're after. So we know that the brand is very important to all the founders. Well, why not? I mean, and we know the tier one in the ecosystem are fantastic. So, and then obviously if we can put in quotation mark, the downside of it is that it's not equity. So they need the loan needs to repay on a monthly basis. Again, there are exceptions because it depends when we come in, because it might be an element of interest only at the right time if it's the right situation, or it could be tranched, or it can be it can be a reduced amortization. So with equity, you just take the money and make sure you grow. With that, we have a lot of we can be very creative. We have a lot of bits and pieces that we can use. And I think what is also important for the founders to know that any venture debt provider, and well, certainly we do, and I know I worked for two important one before, so obviously I know what they're doing, and I can safely say that I pretty know everybody in the ecosystem. Typically, we would take an origination fee, what is called, some people call transaction fee, origination fee. And then we would also take early repayment or termination fee. So this is more or less what the founder should expect.
What happens if a company doesn't do the loan repayments? And have you seen many examples of that? Does that happen occasionally? What happens in that scenario?
So if the company is not able to make the payment?
Yeah. So you said so they take the debt and they have to make the monthly loan repayments, right? Have you seen examples where they just haven't made them or haven't been able to at some point, and what happens then?
Well, yes, I have. And don't forget that I was in this ecosystem after the 2008. I was at Kreos from 2005 for 7 years. So you can safely say that we, at the time, we really, we had a lot of restructuring to deal with. What is important for the founders to understand, and actually, funny enough, I have a live deal that I'm in Finland that I'm actually negotiating. We're negotiating the last, the final stage of the documentation, and I've been having this conversation exactly yesterday to trying to understand, because they're not familiar. The management team is not familiar with the product. So I'm trying to I try to really explain very clearly how a good venture debt provider would act. So from their point of view, we come senior secure. So any venture debt provider would come senior secure. So you take security over the asset of the company for the length of the loan. So as soon as the security, as soon as the loan is repaid, the security is released, and then you're sitting on an upside, and that's it. What the founders really find difficult to get their hand around it is that they say, oh, but hold on a minute, they have security on my company for, for 3 years, anything can happen, and we know where, we see everything and anything within in the growth stage of tech companies, and I agree with them. But what they need, all of you founders need to understand that a good venture debt provider is not in the business to bankrupt company, even though on the legal documents they have the ability to do so, but is very highly relationship driven. The reason why there are not so many venture debt providers in the ecosystem, and maybe the reason why a lot of people try, but I'm not going to name it, it's not really nice, but they didn't manage to succeed in raising venture debt funds, is because you need not only the understanding of the product, but you also need the relationship, because those relationships with all them equity investors out there from the play in our playground, essentially, are extremely important. So when it's a situation when the company needs to support, I really need the equity investors to step in, because the venture debt provider is not able to put more cash. The venture debt provider is able to release the pressure on principle, on repayment on principle, and is able to push back the principle later on in order to give breathing space, but it's not able to put more cash. This is why those relationship with the equity investor is very important. This is why when I issue a term sheet, and sometimes even before issuing a term sheet, I talk with all the equity investors around the table. I understand where it's my job to know the stage where they are by heart. But you always touch base with them and what is their feeling of the company and so on, because I need them to step in with cash if that situation happens. And if I can possibly give any more assurance to the founders that eventually I've seen equity investor to wash their hands on an investment and walk away, simply because it's the nature of the product, is high risk, high return. So if that situation happen, and for whatever reason your equity investor, you are in this really bad situation, your equity investor is maxed up and they decide that they want to walk away, which can happen, this is venture capital. So then you would see that I personally, and it happened to me in the past, I would try my best to get the company as a going concern. And this is and trying to sell the company in order to get the founders something back, and also first and foremost to be completely honest, which honesty is the best way to build a relationship. If I give you one, my first and foremost priority is to get my one back. So I would do anything I can to help you out, for you to give me my mom back. I can forego interest, in a situation like that, but I need my principal back. And this is why I can safely say that, well, hopefully I touch wood actually, you never know. I have a clean sheet, so I haven't had a default for over 6 years.
Amazing.
So, you need to work with them, and please, founders, don't think. I mean, I know there are a couple of horror stories there, but definitely it's not with me on any funds that was involved with me, at least when I was there, and any good venture debt provider would help you. So they won't walk away or bankrupt your company, because it's not in their interest, essentially.
But typically, when is a good time? What do you see? Like, if there are any patterns when founders start to look for venture debt? Should they be, looking at venture debt, at seed stage, Series A, B? Is it across all the stages? when is it that they should really be optimizing and looking at this as an option?
I think SaaS founders, because the type of businesses that they built and the visibility of the revenue, they're able in a way to look at venture debt earlier than a consumer company, for example, because with the consumer is much the credit analysis and the visibility of how they will be able to support and repay the loan has to be larger. So in terms of revenue, well, I'm seeing more and more. I mean, it's been a crazy year, but I can tell you the Q4, which is a good thing. Q4 has been an explosion in terms of quality of pipeline, which I kind of expected, but then I was scared to make any prediction because 2020 is 2020, so you expect anything and everything. Yeah. So, but as I'm seeing a lot of SaaS companies that they are in kind of pre-Series B. So, as a venture debt provider, I'm not able to come before Series A, because they're not really the product and the revenue, the metrics, LTV to CAC and so on. That is not mature enough. So if I can give you some numbers, I like to look at companies that they are in the sort of from 200, it depends. Even at 200 MRR, if they grow really fast. Otherwise, let's say from 250 to 400 MRR is a kind of a
gotcha.
buckets where you start looking, and the companies need to be, of course, VC backed for the reason that I explained earlier, and if they're growing fast and everything is going in the right way. I mean, they probably realize themselves. The founder realized that is actually leverage their growth with some venture debt is actually the right thing to do, because I touched base before on the use cases of venture debt. I mean, one is the one that we just said, so it's just extend the cash runway to the company to get them to the next value creation milestone, and therefore or get them at a higher valuation with better investor as Series B. So give them essentially the 5-6 months extra for them to really grow into the soft spot of growth investors. I mean, in the past, we know, and you clearly know, you are my expert. The magic number for SaaS company to raise Series B was 10 million in ARR. So now it seems that is getting lower and lower. So in a way, so that which means that companies that already have 4 million, but they're growing, let's say 100%, then they 4 million could be the right time to actually leverage that and get bigger Series B. The founders don't really, at the beginning, they don't really think about dilution, but they start to be sensitive to it around the Series B.
When is it not the right fit to do venture debt and take traditional venture capital?
Well, again, is when there is an equity risk. So when it's a shorter cash runway. So it's okay to come to me when they have still a decent runway and visibility into the revenue and the growth. Yeah. But if they come to me that they they have 3 months of cash runway, so they need to find another way, or maybe again it could be simply because they had a soft quarter. I mean, with 2020, I've seen a lot of those situations in which second quarter was a nightmare, and people get hit by COVID. People's revenue got hit by COVID, but that doesn't mean that the company is a rubbish company. So the other situation that they and also when it takes longer to raise equity, then sometimes they come to me, but that is like more out of desperation. Obviously, if they can't raise equity, there is a problem with the product. and a problem that is not really getting traction from equity. If it doesn't get traction from equity, it's going to get even less traction from venture debt.
What's the typical length of a founder coming to you to a deal getting done? Is it done in a week, 2 months, a year?
I'm very fast. Fast. So I'm very fast. And also I believe I really believe in transparency. So my term sheet, that might be a slightly bit longer than my competitor, but I put everything in there. So when in order to minimize any negotiation when you get the term sheet signed. So I'd rather do a little bit of more work. We do more work on the analysis pre-term sheet. We do calls also with equity investor before issuing the term sheet. If we are pressurized with time, we come in with head of terms, because I have an idea after we analyze the company. I have an idea of what we can come, would be acceptable. So, and then, we get IC approved to issue a term sheet, a proper term sheet. And then what I'm not able to control is the negotiation from term sheet issued. But and the reason why I do a lot of work before is to minimize exactly that. So actually, in the last two deals, it's been pretty fast. I have 2 live deals at the moment, and before Christmas is a night. A good problem to have. I'm not complaining. Not complaining. But it's been pretty fast, and then normally a term sheet sign. To close and fund, assuming that the company fund the whole loan or at least a tranche of it at closing, that we're talking about 4 to 6 weeks, and that includes the due diligence at the same time. Actually, I've been to Finland during lockdown in the UK. That was quite something, but we might have a discussion, another podcast about how did you travel during lockdown.
Yeah.
But it's about 4 to 6 weeks, essentially.
Okay, awesome. All right. Do you have any advice? Because it's been difficult for a lot of people to raise capital this year, right? And certainly when COVID kind of peaked initially, in that first wave, there were a lot of investors suddenly, pulled term sheets or just said, we're not investing and we're doubling down on, existing portfolio. So it has been hard to raise capital. What is your advice for founders that are looking, maybe they're struggling to raise in this current climate? What advice do you have?
Well, I've seen, heard all different stories. During the lockdown, it seems that, investors were investing, which from a lot of time, actually, then you find out that those press releases were actually from 3 months before, and which gives the wrong indication to founders. It's very hard to invest when you're not able to meet and actually get a sense of the person, and you have to assess everything on your by any means your financial assessment, but you need to meet all the people that are building this business, and hence the delay. So my advice to you guys is make sure that you start your process earlier, and trying to make sure that you meet the investors and you have a really good pool of choices, and use your resources, use your network. I'm always say to my when I bid for deals, I'm say, guys, I'm a feeder. The Series A guys are a feeder to me, and I'm a feeder to the growth guys. And even recently I lost the deal. It was very competitive in the UK, and despite that, I still mentioned the company to growth investors that they didn't know about it, so they're looking at it. It's all about relationships. So it's important that you guys leverage the relationship and the people that always been. Now is the time to actually clean up your Rolo deck, the box, whatever deck, whatever it's called, and actually pick up the quality contacts you have and go for it. I actually see more and more people using advisors, and I think probably is the reason of being unable to meet. Having said that, there is a lot of capital out there. And don't forget, guys, that everybody, including me, everybody, we are all under pressure to deploy money in order to make sure that we do the number of deals that we told our LP that we would. So that is the same for equity investors, for venture debt investors, for everybody. So there is capital there. So don't despair. You just need to make sure that you talk with the right people and not with time waster.
Amazing. Final question, Donatella, as we come to the end of the show. You mentioned that you haven't had a day off pretty much like since March. And you've got two deals to do before Christmas. When Christmas comes, when are you going to take a day off, and what are you going to do to kind of recharge for 2021?
Well, one probably is gonna be closed, but no, maybe signed at the end of the year. One definitely will be closed before Christmas because we're there. I had my summer holiday that got cancelled at the last minute, thanks to my lovely Macron. So I couldn't go, and I chose the last, end of August. So obviously the school started, so there was not an option. So now I have this crazy plan to trust myself and my car, and pack the family in, and drive to Zermatt for Christmas.
Okay.
So, I've been in daily contact with the hotel in Switzerland, and they've been super nice. Clearly, no need to quarantine there.
Yeah.
It seems that I can leave the country even if London gets into tier 3, apparently.
Okay.
So, let's see. I'm crazy.
Fingers crossed.
I need a week off desperately, and I don't want it in my house.
Why not fly? Is it? I mean, it's probably cheaper to drive.
No, it's not so much the cost. I don't trust them. Yeah. I don't trust them because when you fly, even if you fly, for example, to go skiing in Zermatt, and Switzerland is the only place that you're able to ski, because all the other resorts, Italy, Germany, France, is closed. And because of that, the train from Italy, they don't go via Switzerland now. So I've got everything against me. But the reason why I want to drive is because I am in control. And I'm not at the mercy of trains, planes, you name it.
Fair enough. Good stuff.
And you?
Oh, well, I mean, I've not had a holiday since February, so I'm very much.
Welcome to the club.
Yeah, we're in the no holiday club, which I'm not proud of, but it's been essential. And but yeah, I'm desperate for one. I'm taking from the 24th. I should be off for at least 2 weeks, all being well. I'm not sure what to do with it yet, so it depends. But hope maybe something last minute might come up.
Or maybe just you pack the car. I just pass by you, by Margaret towards the shuttle, the Euro shuttle, and we take the kids skiing.
Sounds good. I
mean, I'm a dreamer, I know, but what can I say? If you don't dream, you don't get there.
Sounds good, Donatella. Well, thanks so much, Donatella. Where can people find you online?
Oh, they can find me on www.flashpointvc.com, or they can find me on Twitter at Callegaris D, or on LinkedIn, Donatella Callegaris, or my email is donatella@flashpointvc.com.
Awesome. Thanks so much for being a great guest today.
Thank you for your time. Always a pleasure talking to you.